morning, everyone. Paul McMann here with Forex Smart Trade. It is Thursday, September 9th, 2021. So glad you could be here with us this morning. Here at Forex Smart Trade, our mission is to help you become the best version of yourself. And we do that by teaching you how to currency trade with our super accurate proprietary trading tools and our best in the business, personalized one-on-one training. We believe that the only effective way to learn currency trading is to be taught by someone who knows what they're doing and has the tools to show you how to trade, which is what we do. In this session, what I do is with our tools, there's a dozen different signals. As you get trained, you will be exposed to the various signals, and you will find signals that you like, and then we will create a trade plan using those signals. The two that we're going to use this morning are something called the 10-point trade and the thick orange line trade if we have time. One is looks for basically tries to get all the lines to line up. The other is a little scalp trade that's good for 5 pips. Before we start, we need to listen to this guy. So let's go ahead and do that.
Due to federal and state regulations, we are providing the following disclosure. Please stay tuned, as this will take less than a minute. Foreign exchange, futures, and cryptocurrency trading are highly risky, and you can lose all the money you invest should you decide to engage in live trading. We are not responsible for your investment, trading, or tax decisions. We are not licensed financial advisors, traders, accountants, stockbrokers, or attorneys. We are not licensed commodities brokers and do not engage in or facilitate commodities transactions. We are not an introducing broker, and we make no recommendation as to where you should invest or what broker you should trade with. As you apply what you learn, we recommend you seek advice from licensed professionals. Any trade results that we show should not be considered typical of our students. We do not and cannot track the results or performance of our students' private trading accounts. We do not know what a typical or average student earns or loses trading. This is not a get-rich-quick program, guaranteed system, or business opportunity. We sell training and trading tools. We make no promises our training or tools will generate future income for students, and you may not make your investment back, including your investment in this training. Any redistribution or recording of this material is strictly prohibited without advance written permission.
Hey, just to confirm, can you all hear me? Somebody said they can't hear me. My little meter here is showing that sound is coming out on my side. So if you don't hear me, no one else is. So some people can hear me. So if you can't hear me, there's something wrong with your speaker. With respect to the purpose of this, it's twofold. One is to show you, to give you a little instruction on the various signals by watching me do my analysis. That will make you a better trader. We do a number of these. I'm sorry, we do a number of the live trades. If you are in the light program, you get access to what's in the orange. If you are a member, you get access to trades twice a day, basically. One in the morning, one in the evening, one on Sunday. Morning trade is basically a little scalp trade. Evening trade is typically a long-term trade. But one of the great things about our program is we're here every day. We're giving instruction all the time. And historically on these live trades, we net about 150 pips a week. So one is for instruction, and two is so that you can see that the tools work, that they're accurate. We come online, we do our analysis, we take a trade, and then you see the trade close. With that, I work off of a checklist, a little bit like a pilot's checklist. I check to see that the green charts are current and that the MetaTrader 4 is connected. I did that before we came online. Review of yesterday's trade. Very important to review what you do on a daily basis, both for trading and in life, to take that little recount of what happened during the day and what could have been done better and what you need to do in the future to make sure it doesn't happen. on the trading. We want to make sure that we're not making obvious mistakes. The way to correct the obvious mistake, I found, at least with respect to trading, is to take a little screenshot of the picture of what the screen looks like before you take it, or right after you've taken the trade, and that way you can come back to your coach or me, and we can take a look at it if the trade didn't go right, and say, hey, this is what I'm seeing, to make sure it was a good trade. Now, you're not going to get 100% off of the signal, but you can get 80 or 90% if you're reading it right. On Monday we took or Tuesday we took a 5 pip thick orange line trade, and it closed, I think, within an hour after we took it. As we are technical traders, we want to. Technical trader means we trade based on price action, how the movement of the pair. However, there are news items that affect how the currency pairs move, and we want to know what those news items are, so that we can trade around them, basically. So we go to forexfactory.com, and it breaks the news down into 3 items: low impact, which yellow; medium impact, which is orange; and high impact, which is red. And we've got a bunch of red items, 2 red items and an orange item coming up on the Euro D, starting at 8:45. So we will try to avoid trading the euro this morning, because we're less than 2 hours away from when this news is going to hit. This morning at noontime, Canadian and Canada, Chairman of the Bank of Canada speaks. Any trade that we take should be closed before this happens, so we should be okay there. Some people would argue that if you've got 2 orange items, that equals a red. I don't really adhere to that. Plus, they're at different times here on the USD. Crude oil inventories really hasn't moved the market much in the last few years. So all we need to do is worry about the euro this morning. So with that, now we will go into our technical analysis. I start off with what you have in your folder is the light 6. I call this the composite chart because it gives us shows us 6 different currency pairs on a 1-hour chart, which means each candle has 1 hour in it. And I am starting with the middle chart, which is the majors and minors, and I am looking for situations where we are either overbought, where the lines are above the blue line, or oversold, where the major and minor lines are below the red line. When we are overbought, that is a selling opportunity. There should be a pullback where it comes down a little bit. We want to ride that pullback. Likewise, when we are oversold, that is a buying opportunity. Then the issue becomes, when is the right time to specifically take the buy, and how much is the buy worth? So to determine the right time on the buy, I want to see if we're overbought. I want to see all the lines moving down. And right now, we've got the minors moving down. The majors are kind of going down, but it's really more sideways. I want the line to be coming down. So this sideways line isn't quite enough for me. I want it to be coming down. So I'm gonna pass on this. We do have the double cross, which means the black lines come over the top of the gray, and the red line has come over the green, but this is a little bit too much sideways for me. I want the line to be kind of pointing down. So I'm going to pass on this, even though technically, this is going down. To me, it's not going down enough. So we'll pass. Euro USD, overbought. The lines are going up. This tends to suggest, when I say this, the majors, which are the red and green lines, kind of have a shape that looks like a duck's head, where here's the bill and here's his head, and you can stick an eye in there. This suggests there's going to be a push, still a little bit more of a push upwards. I don't want to take a buy when we're overbought because I don't know how much more of a move up there is. Pound dollar, we are overbought, and it looks very similar to what we saw on the Australian US dollar. We have the double cross. The lines are kind of going down, but they're not steep. I want to catch it when they're more steep. This is more sideways to me. So if I don't have the first part of the signal, I don't bother evaluating the second and third parts of the signal. But just for those of you who are just off the top of my head, I do look at I am looking at the pressure, which is the third piece of it. Pressure's up and green's on top. So even if I liked this part of the trade this part of the signal would kill it, because what I'm trying to do is get agreement. Each of the sections of the indicator measure something different, and if I can get agreement over all three sections, that gives me the highest probability of taking a good trade. And being a good trader is about having that high accuracy rate. So if I can find something that helps me increase my accuracy rate, that's a good tool. So, but just in looking at this is too sideways. Both of them are kind of sideways. So I'm going to pass. USD Canadian dollar oversold. Miners have started to go up. Majors have not. They're still going sideways. USD Swiss franc. We are majors are going up, but they're in the middle of the channel and about halfway. Let's see if we see something else first. We could come back to USD Swiss franc. The steepness here is a little bit more than what we saw on the other two. The miners are, the slope has changed on it, so that I don't like. But the slope over here on the majors is okay. It's just shy of the halfway mark, so I do consider that. The two orange lines, what would happen here is once I see the signal here, I go up to the TNTs, two orange lines going up, which supports this. Dotted blue coming down. Blue coming down means up. So that supports it. So I got 3 of the 4 telling me up. I get soft down pressure with green on top. And the lines are a little bit diverging. They're parallel, but they're starting to spread apart. So the green on top gives me a point. So I've got 7 points here. But I want to see if there's something. I want to see if there's a better trade than this. The little kink in the line here on the miners bothers me. USD yen oversold. Everybody's going up. I've got the double cross, green over and gray over. Other thing I like here is the green line has increased in steepness. Less steep on this section, more steep on this section. So I got 3 points here going up to my TNTs, the 2 orange lines going up. Supports this, the 2 blue lines coming down, supports what we're seeing with the majors and minors. I've got down pressure, but the green has crossed over on top. When green crosses over, we usually see an up candle, and we did see it here. So it's curious that we have a red candle here. This should be a green candle because it's higher than this. I'm not sure why it's showing us red. But I've got 8 points here. So with 8 points, I am going to go and going back to my checklist. I want to find out where the support and resistance are and what the trend is. So to do that, I am going to USD JPY. And it is a buy. So I'm going to get a clean chart. Let's save this. And then I'm going to open up a chart that just has the candles on it. So USD JPY. I am going to crunch it up. It's kind of already crunched up. And I'm going to now drop some support and resistance on it. Support and resistance are spots where the candles seem to naturally stop. So I drop the line in, and then I'm going to move it around to where I see the stops are. And I'm just eyeballing it. I like this spot. It's bumped here, bumping in here, bumped here, stopped here, stopped here. I drop another line in. I like to have a minimum of 4 lines, so I'm going to catch one below. So what we're seeing is it stopped here, stopped in here, stopped in here, stopped in here. These spots where the candles stop, the market tends to replay those stops. So I want to know where they are, so it will impact how many pips I want to take. So right in here it stopped. In here it stopped a little bit. In here it stopped. In here, over here. I want to get one more above and maybe one more below. Right here, right here, right here, right here. On the Euro USD on a 1 hour chart, these tend to be about 30 to 40 pips apart. Right here, right here. So now I'm going to pull it back out so I can look at it a little better. And I want to know what the trend is. So, not really a clear, over the last month, you could say it's been a little bit of an uptrend, but basically it's just traded within this channel. It's gone down, up, down, up, down, up a little bit more, down, stayed in this channel, broke. So I guess you could say in the last day, this we're trading into a down channel. The last day it's been coming down. Reason I want to know what the trend is the trend helps me figure out how many pips I want to take. If I am trading with the trend, I will take more pips. If I'm trading against the trend, I will take less pips. I also want to know how much room I have between the support and resistance line. So I'm going to take the measure line, and I've got 7 pips till I hit the top line and 4 pips till I hit the support line, 7 and 4. Oops. 7 and 4. So 7 up, 4 down. I'm just reevaluating the support line based on where we are. So we're seeing an up move. And a downtrend. All right, so now what I want to do is now that I see where the support and resistance are and how much room I have, what I want to do is I want to get support for that signal that I saw. So to get support for the signal, I want to look at the full USD JPY chart. So this chart here has one pair on it, but it's 6 different time intervals. It's got the 1 minute, 30 minute, 1 hour, 2 hour, 4 hour, and day. So I want to look at that for the USD JPY. And so here is the initial chart. In looking at this, the one thing I don't like, we didn't see. Let's go back. The chart's a little bit different here. I'm going to reload it. The chart's a little bit different. The kinks in the line are off. And now while we're looking at it, the majors and minors are going down. With that, this guy isn't ready yet. What I would be looking at here is I'd want to see support for what I am seeing here. On the 1 hour chart, I'd want to see support on the 2 hour chart and on the 4 hour chart. I'm not looking for the lines to be going up on the 2 hour and 4 hour chart, but I am looking to see that we're oversold, that everybody's oversold. And we have that on the 2 hour chart. Minors have started to go up, majors haven't. That's okay with me. Same on the 4 hour chart. The one thing I don't like here, so I like what I'm seeing on the majors and minors, that they're both oversold, even though the majors haven't committed to going up yet. The slope here on the pressure is a little bit steep, but I guess the lines are converging. The steepness of this kind of scares me a little bit. And then here we've got on the 4 hour, we've got down pressure, but it's weak down pressure because we've got the gap. The day chart, I don't pay as much attention to off of a 1 hour trade, but I don't like this right now because of the kink in the green line that softens it. We do have the upward kink, the kink where the steepness increases on the minors, but we've got the opposite kink where the steepness decreases on the majors. The slope of the lines makes a difference, and with the weak slope, with the weakening slope, I don't like it. I like to have it where we're catching, where the slope is increasing on a buy, not decreasing. So with that, I am going to pass on this. Don't like it enough to trade. And sometimes, our tendency, we have a bias toward wanting to take the trade. And you've got to get to the point of being able to resist that bias of wanting to take the trade. You really only need a couple good trades a day, 2 or 3 to make it. And you can find that in an hour or two. So here we're just going to pass. As we've got less than 5 minutes left in the half hour, we are now going to switch gears and go. We're going to use another signal. We're going to use the thick orange line signal, which focuses on what the thick orange line and the TNT does. So this is a different signal. And what I am looking at is what this number is. The thick orange line number is a scaled number. It goes from 0 when it's as low as it can go to 10 when it's as high as it can go. When it is at 0, that is the thick orange line is telling us it believes there's no more down in the movement. When it is at 10, it believes there's no more up in the movement. If there's no more up in the movement, it is a good sell time. If there's no more down in the movement, it is a good up time. So I want to find situations when there is less than 5 minutes in the top of the hour where this is at 0 or 10. So 3 isn't 0 or 10. 5.8 isn't. 3.7 isn't. 3.7 isn't close enough. 7.1 isn't close enough. 10. All right, so I've got the 10 here. Then my question is, I want something to support it. I don't want to trade just off of one signal. I want support for what I'm seeing here. The support for the 10 that I'm seeing here is, what are the majors and minors doing? This is telling me that there's no more up in the movement, but we're oversold here. If we're oversold, that means the market's going up. I want all 4 of these lines way up here. I don't have that here. So let's go on. I've created 4 of these composite charts with different pairs. These are primarily non-euro pairs or non-USD pairs. So 6.4 is a no. 4.4 on the AUD JPY is a no. 3.8 is a no. 4.6 is a no. 5.8 is a no. 6.8 is a no. 6.8 is a no. 10 is a yes. New Zealand dollar. 10 is a yes, but if I go down and I look for confirmation at my majors and minors, they're still in the middle of the channel. I want all the lines up here, so I don't have it yet. Pound New Zealand dollar, 9.4 or 9.3. So it doesn't necessarily have to be exactly at 10 or 0. It can be within 1 point of either. So 9.3 is within 1 point of 10. And if I look here, all my lines are up here, way above the blue line. The minors have actually already started to come down, but the majors are still way above. I like this. Let's go ahead and take a 5 pip sell on the pound New Zealand dollar. 5 pip sell on the pound New Zealand dollar. Why is it 5 pips? Because we've tested this and we know it. So pound New Zealand dollar. I'm looking here, see if I already got it. Pound New Zealand dollar. I don't see it, so I'm going to go ahead and go to File, New Chart, and I'm going to look for pound New Zealand dollar. Don't see it there, so it'll be in this third group. Pound New Zealand dollar. Pound, where is it? Why don't I see him? Pound New Zealand dollar. There he is. So pound New Zealand dollar, I go to the second row, go to new order. I'm not going to worry about my lot size as a function of how much I've got in the account. I've got $10,000 in the account, so I'm going to take a lot size of 1. Market, what was the signal? Was it 10? Yeah, so it's a sell. So I'm going to just take market sell. Once it's recorded, I'm not going to worry about the take profit. I'm going to put that in now. So I just right click anywhere along the line, go to modify. This trade is always worth 5 pips. I don't have to do any calculating. So 5 pips, 50 points. I click the little blue button. It does the math for me. And we're going to use a 4-to-1 stop loss. Again, 20 pips is 200 points. Click the red. It does the math. I like to make sure I get the full 5 pips. So if I took a sell at 94.19, I want to go to 94.14. So 94.14.3. 94143 to get the full 5 pips. I put the number in. I click modify, and we are good. So to reiterate, we took a sell using the thick orange line trade on the pound New Zealand dollar. We have a take profit of 1.94143, 1.94143, and a stop loss of 1.94433. Stop loss of 1.94433. Some traders on this trade like to actually wait till the hour changes, and they want to see this number move by 1, and it did move by 1. It was like at 9.4 before 9.3, and it's now gone down to 8.1. So either way you want to measure it, I am okay with it. Just seeing that the majors and minors are well overbought, but we are good on this trade. All right, let's see if there's any questions. There is a big spread. Yeah, that happens on. Let's go back and take a look on some of the pairs that aren't actively traded. The spread is big. So we're giving up. Let's see what the spread is. Holy smokes! The spread is huge. So the spread is the difference between the bid and the ask price. On the euro dollar, it's usually like 3 points, which is the 5th decimal. Here, the spread is 4 pips. 4 pips, and we're taking a 5 pip trade. So we're just going to make 1 pip on this. So that's not that great. So had that's a good catch. As part of this is for training purposes, just so that you can see the signal. When you see a big spread on a little scalp trade like that, you wouldn't take the trade. So normally I probably wouldn't. I'm not going to give 4 points, 4 pips to take a 5 pip trade. That makes no sense. There's too much risk there. But as if you went to the Euro USD, so see the difference here is there's 4 points between the 18 and the 22. If you go to the euro dollar, it's like 1.2 points. It's the 5th digit over. So that small spread, taking a 5 pip trade is not costing you anything. You saw the setup. Then the question is the trade worth it? In this case, the setup was there, but paying for pips to take a 5 pip trade isn't worth it. Okay, gang. Thank you for being here. We are here to make you successful traders. So if you need help, reach out to your coach or to me, and we will help you in any way we can. We'll be doing this again on Monday evening. Sorry, the reminder didn't go out this morning. We having a little issue with our CRM, and hopefully we'll have it squared away by Monday. Okay, thanks so much, and we will see you on Monday. Bye-bye.